Welcome back to the deep dive. Today we're doing something a bit different, something we're calling the Old Methods for New Money show.
It's a really compelling mission, I think. We're looking at these ancient proverbial texts and mapping them directly onto modern wealth strategies.
Exactly. We're looking for that kind of universal financial operating system.
That's a great way to put it.
And to be clear, this is not a history lesson. We're looking for the foundational code that, still seems to govern success.
Right, regardless of the asset class.
Whether you're into crypto or launching a startup or building passive income streams, it seems like the core rules don't really change.
And so for you, the learner, this deep dive is really a shortcut. It sort of confirms that these fundamentals, diligence, patience, even generosity, they're like fixed points.
They give you something to hold on to, especially with how fast the modern economy changes.
Precisely. They offer some real stability.
So the core idea here is that this ancient wisdom isn't just, moral guidance. It's a practical, strategic blueprint.
A blueprint for abundance today.
Let's unpack that blueprint. And we have to start at the beginning, which is intentional foresight.
When you really look at it, financial success is almost never an accident. It needs a plan.
And the text for this first step is so sharp. It could be a motto for a modern CEO.
I know exactly which one you're talking about.
The plans of the diligent lead surely to abundance.
And that really gets to the heart of it. The difference between just dreaming about wealth and actually achieving it is that diligence in planning.
It validates everything we hear today about strategic thinking.
Absolutely. Think about it. A VC firm won't even look at a startup without a detailed roadmap. An investor needs to plot out all these complex moves.
It's the same foresight.
It's the exact same principle.
Okay, but let me push on that a little. In the startup world, there's this fear of analysis paralysis. Planning so much you never actually do anything.
That's a fair point, and that's where the idea of the blueprint becomes so important.
The architecture analogy.
The architecture analogy.
Right.
We're not talking about a rigid schedule you can never, ever deviate from.
It's not a script?
No, it's the architectural blueprint. A good architect gives you a design, a clear structure, a foundation that can hold the weight.
So the entrepreneur needs that same kind of plan to build abundance. You can't just stack bricks randomly and hope it becomes a house.
You can't, because it'll just collapse under market pressure, or even its own weight. Diligence makes sure that foundation is solid before you start building.
That makes perfect sense. It's the difference between an idea and an actionable design.
Yes.
So once we have that design, that blueprint, we have to talk about pace. How fast should we be building?
And this moves us from planning right into sustainable growth, which is, I think, a huge challenge to the way we think now.
Everything is about speed.
Everything is about hypervelocity. This ancient wisdom really acts like a strategic brake against that temptation, against all the get-rich-quick schemes.
The warning is so direct. It says, wealth gained hastily will dwindle, but whoever gathers little by little will increase it.
And I mean, just stop and think about that for a second. That is a perfect, concise validation of compound interest.
The most powerful force in finance.
Without a doubt. It's saying the most reliable path is consistent, incremental accumulation. Gathering little by little. It's choosing time over speed.
But the modern financial world is built for speed, right?
Yeah.
Venture capital, the crypto markets are open 24/7. There's this constant FOMO.
There is.
If you're just gathering little by little, aren't you missing out on those huge overnight returns?
That's the challenge, and the answer is that the principle is about longevity. It's not actually about being slow.
Okay.
Hasty wealth is brittle. It depends on luck, on volatility. It can disappear just as fast as it showed up.
So it's not sustainable.
It's not. But sustainable growth builds resilience. Look at the FIRE movement, financial independence, retire early.
All right, that's a great example.
That whole method is based on patience and disciplined accumulation over, a decade or more. You can't get there by chasing one big windfall.
So you might succeed once with a risky bet, but you're not building a system.
You're not. A repeatable system is built on that disciplined, little-by-little approach. It might feel slow at first, but it works.
It's the system that protects the plan.
That's it, exactly.
Okay, before we move on to the next phase, if any of this is clicking for you, if these ideas are sparking something for your own strategy,
Which we hope they are.
definitely. Make sure you stay connected with us. Go ahead and like and subscribe to the show so you never miss one of these deep dives.
All right, so we have the plan, and we have the right pace.
Now we have to talk about action. In the startup world, they say ideas are cheap. Execution is everything.
This is where we get to the real driver of profit. where the blueprint, leaves the paper and actually becomes something real.
And the proverb for this is just. It's so direct. In all toil there is profit, but mere talk tends only to poverty.
It really confirms that tangible action is what generates profit, whether it's your main job, a side hustle, whatever. It's the toil, the actual effort, the work, all the talk about market potential, the perfect business model that just drains your time and your money.
So if the plan is the architecture and patience is the pace, then toil is the construction crew.
I like that. Yes, you have to actually show up and do the work.
It's the enemy of analysis paralysis.
It is. The only way to prove an idea or make a profit is to actually do something.
Okay, so now we're executing. We're in the market. We're interacting with people. And this brings us to what I think is a really counterintuitive idea.
The power of connection and giving.
Right, this paradox about generosity.
This is where we shift from just your individual effort to building relational wealth.
And the proverb says, one gives freely, yet grows all the richer. On the surface, it doesn't make sense.
It doesn't seem to.
How does giving away your time or your knowledge or your connections make you wealthier?
Well, this connects that ancient idea directly to how modern business works, especially online. It's all about networking and adding value.
But if I'm launching a product, why would I give my best insights away for free? Or mentor someone who could become a competitor?
Because you're trading a short-term asset, your time, your knowledge, for a long-term one.
Which is?
Trust and reputation. In a world with so much information, trust is the ultimate currency. Being generous builds these deep relationships that pay off way more in the long run than just, grabbing every dollar you can right now.
That makes me think of the open source model in software.
That's a perfect parallel.
You give away the code for free, and that attracts the best developers, the best feedback, and then the big companies invest because you've proven you're the center of that ecosystem.
Exactly. You grew richer by giving freely. You establish yourself as the authority, and that opens up much bigger opportunities down the road.
Okay, let's bring this all together with the final pillar of the blueprint, ethical wealth management.
Right. The sources are pretty clear that abundance comes with a certain responsibility, that how you manage your wealth affects its longevity.
We're talking about things like impact investing and charitable giving. And the instruction is, honor the Lord with your wealth.
Now, that might sound spiritual, but there's a very practical financial strategy embedded in there.
How so?
The modern translation is about ethical practices. Think ESG criteria. It's this idea that linking ethical behavior and giving back, it's directly tied to long-term financial health.
You're not just hoarding wealth in a vacuum.
No, you're using it to strengthen the very community and economic environment that allowed you to create that wealth in the first place.
If you damage the environment you operate in, eventually the market turns on you.
It has to. And this is why all these principles, diligence, patience, action, ethics, are so versatile. They apply everywhere.
Personal branding, managing different income streams, even in volatile crypto markets.
It doesn't matter. The laws of human behavior are the constant.
Which brings us to the final big analogy, the one that really ties this entire deep dive together.
This is how you connect it all. You can compare these proverbs to the laws of physics and engineering.
The gravity analogy. This is the big one.
It is. Think about it. You can build a modern skyscraper with digital designs, advanced steel, all the algorithms you want.
But you still have to obey the law of gravity.
You absolutely have to. If the engineer ignores gravity, the whole thing collapses.
And it's the same for financial engineering.
Exactly. Your strategies might involve complex derivatives or AI trading, but they still have to obey the timeless gravity of human behavior.
Diligence, patience, trust.
Those are the foundational forces. If you try to build a massive company or portfolio too fast, without diligence, or by breaking trust,
you're defying financial gravity.
You are. And no matter how cool your system looks, eventually that structure is going to come down. The blueprint isn't optional. It's foundational law.
That is a brilliant way to synthesize it all. Okay, so let's do a quick recap for you, the listener. The 4 pillars of this old methods for new money blueprint. Let's do it. First, you need a diligent plan, your architectural blueprint. Second, embrace slow, consistent growth. That's the power of compound interest.
Third, prioritize execution. Remember, toil creates profit, not just talk.
And finally, the power of generosity and ethics to build the most critical currency of all, trust.
And that leads us to one final thought for you to take away, one question to really consider.
Go for it.
Given that all these ancient principles rely on predictable human behavior, patience, diligence, trust, what does that tell us about the ultimate foundations of value and faith that are required for even the most cutting-edge, decentralized digital financial systems to actually work?
That is definitely something to think about as you work on your own blueprint. And don't forget to like and subscribe so you never miss another one of these deep dives. Thank you for listening to Old Methods for New Money.